Hey everyone. Welcome back to BitcoinDorks. Today, we're diving into the latest insights from BlackRock, one of the world's largest asset management firms, regarding Bitcoin's recent performance and the impact of Wall Street adoption on its returns. Bitcoin, the pioneering cryptocurrency, has been experiencing a resurgence of interest from institutional investors, particularly from Wall Street. However, according to recent statements from BlackRock, a leading global investment management corporation, Bitcoin's returns are showing signs of decline amidst this growing institutional adoption. BlackRock's observations highlight a noteworthy shift in the dynamics of the cryptocurrency market. As more traditional financial institutions embrace Bitcoin and other digital assets, the market landscape undergoes significant transformations, impacting the way these assets perform and interact with traditional investment vehicles. The rationale behind BlackRock's assessment of Bitcoin's declining returns lies in the evolving nature of institutional participation in the cryptocurrency market. While early adopters and retail investors were instrumental in driving Bitcoin's meteoric rise in previous years, the recent influx of institutional capital brings a new set of dynamics and considerations into play. One key factor influencing Bitcoin's returns is the influx of institutional money, which often comes with a more conservative investment approach compared to retail investors. Institutional investors typically have larger capital allocations and may prioritize risk management and portfolio diversification strategies, which can dampen the volatility and potential returns of Bitcoin. The involvement of Wall Street giants like BlackRock in allocating resources to Bitcoin and other cryptocurrencies represents a significant shift in the landscape of digital assets. As these institutional players enter the fray, they bring with them a level of scrutiny, due diligence, and risk assessment that is characteristic of traditional finance. Unlike retail-driven markets, where sentiment and speculation often dominate, institutional investors approach the cryptocurrency space with a more measured and strategic mindset. Their rigorous evaluation processes and risk management practices contribute to a more mature and stabilized market environment. This institutionalization of cryptocurrency investment not only signifies a maturation of the asset class but also has implications for its future trajectory. While retail investors may drive short-term price movements based on sentiment and hype, institutional involvement introduces a level of stability that could temper extreme volatility. However, this newfound stability may also come at the cost of lower returns compared to the exponential growth witnessed during earlier stages of cryptocurrency adoption. BlackRock getting involved in the cryptocurrency market not only injects significant capital but also amplifies the visibility and credibility of digital assets. As institutions with long-standing reputations and expertise in traditional finance, their endorsement of Bitcoin and other cryptocurrencies serves as a powerful validation of the technology's potential and its place in the future of finance. This validation carries considerable weight, especially among conservative investors and traditional financial institutions who may have been hesitant to embrace digital assets due to perceived risks and uncertainties. It signifies a shifting tide in mainstream perception. It signals a departure from viewing cryptocurrencies solely as speculative assets or fringe technologies and acknowledges their growing relevance and significance in the broader financial landscape. This acknowledgement is critical for broader acceptance and adoption, as it helps dispel misconceptions and instills confidence in the legitimacy and viability of digital assets as an investment class. This endorsement speaks volumes about the level of due diligence and risk assessment conducted by these institutions before entering the cryptocurrency space. Given their reputation and expertise in traditional finance, their decision to embrace digital assets suggests that cryptocurrencies have undergone rigorous scrutiny and are deemed worthy of inclusion in institutional portfolios and investment strategies. The ripple effect of this endorsement extends far beyond the initial investment. It has the potential to catalyze a domino effect, triggering increased interest and participation from other institutional investors who may have been on the fence about cryptocurrencies. As more institutions follow suit, the collective validation from industry leaders reinforces the legitimacy of digital assets as a viable investment option. Furthermore, it serves as a beacon of guidance for retail investors who may look to these institutions for investment advice and strategies. Seeing these industry titans allocate resources to cryptocurrencies can instill confidence in individual investors, prompting them to follow suit and allocate a portion of their investment portfolios to digital assets. In essence, the endorsement of Bitcoin and other digital assets by BlackRock not only signifies a significant milestone in the mainstream adoption of cryptocurrencies, but also fosters a broader sense of trust and credibility in the asset class. As institutional and retail investors alike recognize the potential for growth and value in digital assets, the stage is set for continued expansion and maturation of the cryptocurrency market. However, it's essential to recognize that while institutional adoption may introduce some level of moderation to Bitcoin's returns, It also brings increased legitimacy and mainstream acceptance to the cryptocurrency market. As more institutional players enter the space, regulatory clarity and infrastructure improvements are likely to follow, paving the way for broader adoption and long-term growth. In conclusion, BlackRock's assessment of Bitcoin's returns amidst Wall Street adoption serves as a reminder of the evolving dynamics within the cryptocurrency market. While institutional participation may introduce new challenges and adjustments, it also signifies a significant milestone in Bitcoin's journey towards mainstream acceptance and integration into traditional financial systems. That wraps up today's video. Don't forget to like, share, and subscribe for more updates on cryptocurrency markets and news. Until next time, this is BitcoinDorks signing off. Stay tuned for more insights and analysis.